Recent developments in AI have been compared to the Industrial Revolution, but the question as investors is how to benefit from this in our portfolios. I'm Ramin, a financial YouTuber from the PensionCraft channel, and today I'm collaborating with Trading 212 to teach you more about investing. Remember, as always, that nothing in this video should be construed as financial advice. AI is continually in the headlines with new applications appearing every week. Applications like image generation have improved so quickly that AI art is almost indistinguishable from its human counterpart, as you can see in this photograph which won an award. It was the Sony World Photography Award. As well as spectacular advances in artificial intelligence art, applications like OpenAI's ChatGPT have also been making headlines. Here you can see it succeeded at a task which many people thought would require high-level human expertise, which is passing the bar exam. But even this grueling 2-day test has now been mastered by artificial intelligence. Innovations in AI are going to transform many aspects of our lives and the way we work. But how can we invest in companies that benefit from the advances in artificial intelligence? I break down the companies that benefit from AI into 3 categories. The first category is the most obvious, and this is companies that develop and maintain AI models. This would include applications like Alphabet's Bard. Other applications would include computer vision and navigation for self-driving cars. Then we have the hardware providers that provide the computer hardware on which computationally intensive calculations for AI would run. This would include companies like Nvidia, for example. Then the largest category would be companies that are adopting AI to make their business processes more efficient and more profitable. One problem with identifying companies that benefit from AI is that all companies are talking about AI. If you look at company earnings calls, the number of companies which are mentioning AI in 2023 has surged. But every company that mentions AI on its earnings calls is not necessarily going to benefit from AI. It is possible to delegate the difficult task of finding companies that benefit from AI to fund managers and to buy AI-focused thematic funds. However, it's difficult to find pure artificial intelligence funds. Many of the largest AI funds would also include robotics companies, such as BOTZ and RPTX. Other funds would include more general tech stocks, with AI as the central theme. It is possible to find funds which focus purely on AI, such as these 2 funds on Just ETF, from WisdomTree and Legal & General. After the tech wreck, in which many tech stocks fell sharply in 2022, there was a resurgence in some tech stocks which had a focus on AI. Probably the best example of that resurgence is Nvidia, whose chips allow those computationally intensive calculations which are required for AI to run. Microsoft has also been very quick to integrate developments in AI into its applications, such as the browser Bing, and investors have rewarded it with a very strong rally. Something to be aware of are the tilts which are introduced into a portfolio by buying funds which are focused on AI. For example, if we look at the top 10 holdings of this MSCI Robotics and AI Index, 9 of the top 10 holdings are based in the United States. The US makes up 81% of this index, so by buying a tracker of the index, you're also tilting towards the United States and assuming that the US will outperform. If we add Japan, the top 2 countries make up almost 90% of the index. This increases the risk of your investment because if the US does underperform, it'll also drag down your AI investments. Another approach is that instead of buying AI funds, instead you buy single stocks which your research shows will benefit from AI developments. You can start off your research by looking at some of the top holdings of AI funds. For example, here are the top 10 holdings of the WisdomTree AI ETF. Again, note the concentration in just one country, the US, and one sector, which is IT. However, you may find that you disagree with the fund managers on which stocks will benefit from AI when you do your own research. But if this is your approach, it may make sense to look at more than one fund. You may find that some of the stocks overlap. For example, Nvidia is one of the top 10 holdings of this LNG fund, and it was also one of the top holdings of the Wisdom Tree fund that we saw earlier. It's easy to get swept up in the euphoria of a rally, and it pays to remember some of the general principles of investment. Firstly, don't overpay. Ultimately, share prices will only rise as quickly as a company's profits. If the ratio of the two, the price of the company divided by the past or future profits, get too far out of line, eventually what happens is that the price snaps back to the fundamentals. This valuation measure, price to earnings, gets stretched during periods of euphoria. Here are the price to earnings multiples, which is that valuation measure for US large caps, mid caps, and small caps. But here we're also comparing to the mega cap 8 tech stocks in the US. The mega cap 8 consists of several stocks whose valuations are being pushed up by expectations about profits which are going to come from AI, such as Microsoft and Nvidia. Now, if the future realization of profits doesn't meet expectations, then these share prices for these companies could fall sharply. If there's a company you really believe in, it may be worth waiting to buy it at a more reasonable price. The same is true of single stocks. For example, if you look at SoundHound AI's share price, you can see it rising sharply here on Trading 212. The company creates voice interfaces so that other companies can interact with their customers directly via speech. It has some great video demos on its website, but what about its fundamentals? Revenue, which is how much income a company makes, is rising sharply for the company, as you can see here on its income statement. There is a red flag here, however, which is that the company's spending more than it's making. In other words, it's loss-making. Furthermore, its losses are growing. Now, for a growth company, this is not unusual. However, at a certain point, the company has to become profitable. Otherwise, its share price can't carry on increasing. So it's always worth reading the company's annual report to see if it has a plan for when it's going to become profitable. Remember, not all companies make it. I hope this video has helped you decide whether you want to invest in artificial intelligence and how to go about it if you do. There's no question that AI is going to transform our lives, but as we've seen, it's not easy to find the companies that will benefit from this transformation. It really pays to research these companies to see if you think they'll be one of the winners in this exciting but very competitive space.